me tweet it too.
All right. Guys, sorry for this technical problem. We just got cut out for some reason, but we are back. So let's go on with this cool discussion. I think we were discussing about the macro situation in the Bitcoin market and the comparison between 2016, 2017, and 2020. So apparently there are several parallelisms, and we might see soon a bull run coming. But what I wanted to ask you guys is that in 2016 and 2017, we saw many scams and very projects coming up, and they were basically discrediting the whole crypto space. So now Jake mentioned the fact that some of those projects or similar shady projects are in traction once more, and see why is that positive.
Hey, I mean, look, if you think these are bad, I mean, just look what was around in 15 and 16. It's a style, and people think things over and over. My mentor, Kazanomics, did an interview with this guy named Bob Surplus that I listened to from 2015, and the conversations that they were having were the exact same conversation we're having now. Why would anyone buy these things again? Like, that was the same conversation. One thing that I can recommend to the audience is if you're new to crypto and you're new to coin, study your history, know the past, and understand market cycles. Don't just come in because your friend told you the fortune and just go crazy. If you study the way these markets behave historically, it'll give you a leg up on the other people that are joining at the same time.
I would just piggyback on that. The fact that you have these altcoins, these scams, it's a sign of a thriving ecosystem, because it's almost like there's a whale and there's these little tiny fish that are eating the plankton or eating the scales off of it, whatever. Without a thriving ecosystem, you couldn't have those things, and that's always going to happen. You're always going to have parasites. The parasite needs a host body. We have a good host body here in Bitcoin, and that's why that's happening. So it's not a bad thing. I think it's just a sign of a healthy ecosystem, actually.
That's what it is. You know?
Yeah.
The fact that they are starting to move, you would hope that Bitcoin dominance, that if it were to remain the same or go down, that you would hope that the money would trickle into actual quality projects. But those are few and far between, but they do exist. So somebody that I would say out of the mid to larger altcoins that are more stable, obviously Chainlink is performing for the past 2 years. That's a coin that just, is in a very bullish trend. And
XTZ.
And right? Tezos is, that's the other one. So, there will be other, and, depending on your own risk appetite as well as need for liquidities, you may not want to participate in other things. But another thing that I noticed that really reminded me of 17, and when I talk about really, I mean, like, it really reminded me, was this thing called Uniswap, which is like, it's kind of like a decentralized exchange where they're kind of doing something with, it's like almost like a security, but not, but basically it reminds me of Ether Delta, because you need to really kind of study a little bit to learn how to use it. It's not impossible, but it takes a little practice to understand how to use it. And you can do a fat finger and lose all your money really quickly. But Ether Delta was this decentralized exchange during 2017 and before that was the place where the people that really were kind of deep into crypto, not the noobs, would buy these ICOs that weren't listed on exchanges and get them at like such a low price with liquidity and buy it a little at a time. And then out of nowhere, they would go up 1,000%. Well, Uniswap is kind of the same thing, because I'm seeing coins do 30x, 40x on there, and nobody's even talking about it yet. So the fact that that's happening is also something that's kind of like, hey, we got a risk environment going on here. It's time to pay really close attention and learn how to use these things, because what happens is the people that have the drive to learn how to use it, they get ahead and they buy it for cheap, and then they sell it to the lazy guy who buys it when it ends up on Binance. That's just how this works. And if you're too lazy to figure out how to use it of all the different things in the market, you're going to lose. I mean, you're playing against, this is not a game. It's like if we played pickup basketball with NBA players. That's what crypto is, and that's what every market is. You're playing with the smartest and the brightest people, and they're coming to take your money. So if you come on and just willy-nilly with no plan, just, bare minimum, what are your odds of success against professionals that, have all sorts of at their disposal?
I think you bring a point. What kind of responsibility do you have to yourself as a investor, and how much time, how much effort, and what is your method, and how are you approaching it? And I think you have to be responsible with that and be willing to lose it all if you're going to play some of these highly speculative things.
100%.
Yeah, need to be very, very careful, I think. And also, yeah, I have another question from the audience. Medical Error Interviews Podcast is asking, like, how much of your portfolio is divided between Bitcoin, Ethereum, and the other altcoins? If you want to disclose a bit, like, what's your portfolio construction, Chats?
Well, I think in terms of monies that I'm actively trading and managing, a lot of it is crypto. The stuff that I have personally that I'm not managing, 401k, these other things, I'm not trading that. In terms of how I personally approach it, I keep probably whatever my crypto holdings, a good amount of that, I keep it in cold storage, so I'm not tempted to trade it. Then I keep certain more fungible funds that I can use to leverage trade, that I can use to play altcoins and certain momentum moves. So I keep a certain kind of separated funds. And when I'm approaching a trade, I use bankroll management, similar to a poker player who's a tournament player. I never put more than 5% of my bankroll, my fungible bankroll, into a trade. Maybe 10% if I had a glass or two of wine. We all make mistakes. But I'm using a kind of a bankroll management twofold, a percentage of my active funds and using the cold wallet, I think, way to answer that question.
Yeah. Management allows you to stay in the game. And once you learn, you realize that you're not always going to be right, but when you're right, you're going to do well. And when you're wrong, you're going to be wrong right away. And, if you have a system and you have something that works, then you can just keep playing and playing and playing. It's kind of like exercise, right? Like you start working out, you learn how to work out, you start to build the physique. Now you're good. You're good, but you have certain things that you do to make sure you don't hurt yourself. The day that you don't warm up properly or you don't do what you've been doing to get you to that level is the day your shoulder breaks and now you can't work out anymore. It's kind of the same thing with trading. You have risk management and rules set and you follow those rules. You try to avoid getting emotional, because when you get emotional, you make a mistake and you ignore the rules, and that's how you get wiped out of the game very quickly. So for me, I keep, similar to Ched's, a portion of my portfolio on a cold storage. That's just kind of like, if something crazy happens, I'll access it. You need to I won't sit there and watch Bitcoin go up 300% and do nothing. I won't watch it go down 70% and do nothing. There are certain levels that I watch for where I will absolutely go into the cold wallet, where I will absolutely deploy additional funds of USD. So, I trade altcoins, I trade stocks, I trade Bitcoin. I have a cash. I never want to have less than 50% of that portfolio in Bitcoin. It's a combination of cash and Bitcoin. And, now I'm starting to deploy a bit more altcoins, but I would say maybe like 20, 30% at this point, but not all in one trade. But that's what I'm using because I'm pretty bullish on them.
Cool. All right. So moving on to the next question, I want to know, apart from the technical analysis, are there other methods that you use to make decisions in trading? And if so, how do you combine them with technical analysis? Jake?
I'm sorry. Can you repeat that question one time? Sorry, Giovanni.
Yeah. So I want to know, apart from technical analysis, how are there other methods that you're using to make decisions in your trading, apart from technical analysis, and how you can combine them with TA to make decisions?
So that would be sentiment trading, as kind of I alluded to before, and that in it is technical analysis. When you really it, because the chart we're looking at is just what people that are playing the market think about the price of said asset. And, when you look at just a chart, you'll notice there are similarities. It doesn't matter if it's Bitcoin, gold, or anything. It's because that's the people's emotions of who's participating. So if you understand human behavior and psychology, that's what I studied under, my mentor for, was that. So that matters a lot. There's a lot to it, but it's something that can be just as accurate as anything else. It's one of the most accurate things, but it's extremely difficult to do if you don't know how. So that's something I'll combine different sentiment analysis versus technical analysis and price action that I'm seeing. And every time that's happened where I have a very strong signal on both, it's always been like a very good swing trade, you know? So there's certain things that happen that I watch for. And when that happens, I'll make a note, hey guys, like be very careful now. So, and that has allowed me to catch some crazy moves. Like the October 2019 when we pumped 7,300 to 10K. Like I didn't know going to 10K, but I knew something big was coming because a few different sentiment analysis reads that I was watching all hit at the same time, and everybody was on the wrong side of that. Really, people did not expect that to happen, and the whole way up, everybody's shorting it. That's what creates the fuel. But yeah,
it's interesting because you mentioned before regarding a tweet by Arthur Hayes that was important to make you understand what was going on in the market, like just a few days ago. So that kind of collides with an opinion that I heard from the Wolf of Wall Street last time he was our guest on our show, and he was talking about when that tweet came out saying that some Satoshi's coin were moved, and immediately after the market collapsed. And I was asking like, what was the connection between the two? And he was basically saying, yeah, I mean, that has no relevance. I mean, I'm just looking at the chart. The tweets really they don't have an impact on my decision because I just look at the charts. So you have more of a you have a different kind of perspective.
I remember the minute that happened, because I don't have the chart in front of me, but there was something going on in the chart where I really didn't like the 15-minute structure there. It was in a very tight range and wasn't breaking through. And then I wish I had it in front of me, but it did something that I like. So I was all, hey guys, I'm going to short this. And as soon as I open the position, that tweet comes out, and I'm like, oh, okay, this is good, because no matter what, they just need a narrative to kind of justify what the price is doing at all times, and that happened to be it at the time, which also provided a buy the dip opportunity.
Let me just jump in and defend Jake here. I think he's really nailed it, because you have to look at social psychology. You have to look at sentiment, and you can make an argument that it's as good as any candlestick, Elliott wave, Fibonacci, anything you want to throw at you. You just get a feeling based on sentiment. You just get a feeling it's going to bounce. There's so much blood in the streets. There's despair. You see those capitulation tweets. I think there's where people say, I held, so-and-so said to hold, screw this. When people capitulate at the bottom, and when Arthur Hayes does that tweet, it's 10-3. He knows that the juice is about to flow, man. He knows it's about to happen.
Because other people are tweeting, so, here we go.
Here we go. That's it. You can watch. You don't even really need a chart. If you don't mind fading a couple moves here and there, but you really don't need a chart if you just look at social media. I want to just touch base briefly. You talked about those coins being sold. I'm going to share a screen for about a minute here. I just want to make a quick point. That was on May 20th. The clue actually was that the following day had more volume and actually continued the further downside. So the move wasn't baked in. Like it really wasn't, like it wasn't absorbed in that day. So that was a big tell really that following day, that it kind of continued further on higher volume. So there is an impact in that. It was a delayed impact in that sense.
Oh, sorry. Just one thing to add on to the Arthur tweet. I mean, when you had the dump from 10.5 to 82, put up at 8,300. Real and P shift. Look at this scam. It's not a meme, guys. Like when these guys show up, you need to pay attention. This is how it works. Like quite
you
literally.
have to have a market. You have to have someone to buy a blow off top. You have to have someone to chase. You have to have the FOMO buyers, or else there'd be no liquidity. If everybody agreed on everything, the life would be boring. If everyone agreed on the same price, there'd be no market. So you have to have that. You have to have, Jake, you talked about people who didn't research and who were going to buy with the RSI at 95. You know, you just have to, it's an ecosystem. You have to have a food chain. It doesn't mean you can't move up. And I would just quibble a little bit with the NBA analogy, because a lot of those people perhaps were born with gifts. I think almost any person, if they put in the time and the work, they can succeed with technical analysis, in my humble opinion.
Yeah, I agree with you 100%. It's not a perfect, but it's more of like you're playing with the pros right now. You know, like you're not going to the minor leagues. You know, you're not going to college. You're going right into the game.
Yeah.
So you gotta be careful.
You really gotta be careful. But Giovanni, I'm telling you, social sentiment, and I know Wolf of All Streets, I think he is also keen social sentiment. I think he probably would agree actually with us that those tweets do matter, and especially with Mr. Hayes, given that BitMEX is known as the king of the shenanigans.
Yeah, but if we're sitting here talking about it now on a show like this, it's so popular. Next time it may not work out that way.
That's true.
You know, because it's all about getting the majority of the people on one side of the trade, right?
It's like a quantum particle. If you look at it,
you never rely on just one thing. That's because that's how people, when they try to sentiment trade. Remember when CNBC was the ultimate counter trade? It's like as soon as CNBC says something, it dumps.
Yeah.
Well, in 2019, they were bullish, as well as Rand Neuner was starting to get bullish when Bitcoin was around 4K, and everybody was like, "Oh, it's going back down."
Right.
But you know what? There's 200 people on your tweet saying it's going down. Guess which way it's going, guys?
Yeah. It's like a reverse psychology. You need to go the other direction.
Nothing you could do about it. It's going to happen no matter what. It doesn't matter. It will always happen.
Okay, guys. So let's move on to the last question, and then we can wrap things up. So I want to ask you something regarding the macro situation right now, like just related to crypto, but in general about the situation in the global economy. So we are seeing the stock market rallying after the crash in March, and apparently the stock market is counting on a smooth recovery of the economy from the COVID crisis. However, the situation right now in the US looks quite bleak. Like we are seeing record unemployment. We have been seeing small businesses struggling to survive. We have been seeing mass protests that are ripping apart the country. So, in an interview previously that I took with the CEO of Real Vision, Raul Paul, he said that the stock market is trading hope, but is not trading reality. So, do you think that the stock market rally is something that is sustainable, or it will be confronted very soon with what reality is? Chats.
I think it's the market doesn't seem to be functioning based on kind of fundamental laws right now. I think we're seeing the system being broken, and there's definitely a disconnect from my view. And I'll put out the disclaimer: I'm a TA guy. I'm not an FA guy. I don't do streams talking about FA things. But it seems to someone as uninformed as myself that there's a big disconnect between the main street and the market. You can't completely shut down the world for a number of months. And kind of based on what I'm seeing, you're going to have some reopenings and reclosings. There's going to be a stutter step, 2 forward, 1 back, or 1 forward, 2 back. We're going to see kind of there's not in the stock market now. All that out. You saw a huge drop and then a really beautiful bull run. You're going to have corrective moves within a trade, within a range. So you can have, if it drops like whatever 50%, from there it can have a huge bounce within that downward move. So it's not surprising from a tactical standpoint. But when's it going to stop rising? I don't know. Is it disconnected? Yes. Is there an awakening, a rude awakening coming? Probably. A lot of that will depend also on the elections. We're in a presidential election year. So there's going to be a lot of turbulence, certainly until early next year, in my opinion.
Jake, what's your thought about it?
I would say that, yeah, I mean, there's, especially in a crash like that was a black swan. Volatility was crazy. Why, literally, you can't bet against that. I remember the week, because we did a stream on Sunday night, me and my mentor Kaz, kind of warning people about coronavirus in itself, as well as markets. Like, get the hell out of everything, be prepared. This was before the crashes happened. It was literally right there. We warned people, but that move was that was some move across the board. And when you look at what markets do and look back at your history, S&P, all the indexes, these are all in bull runs for 100 years, right? Like, so ultimately it's doing exactly what it's supposed to do and what it's meant to do. So I would anticipate that we'll get to all-time highs, eventually. Of course, there's going to be pullbacks, but I don't see why. I mean, we had Corona, all these things are happening, and the market just keeps going up. Obviously, there was a dip that cleared everybody out. Now everybody is saying, hey, the world's burning. Why should I buy? But there are people that have cash looking to buy stuff. They're not going to hold on to the cash. They're either going to invest in real estate, maybe in they are stock. They're not going to hold on to their cash. The money has to go somewhere, and we're just printing it.
So, yeah, but how much of that is getting to the consumer class? How much of that is really going to get down to kind of the people who are spending the money? Will they be able to afford their medicine in 3 months? The rent.
Yeah, but I mean, consumer class is always the one moving the stock market.
Right.
On the top. So what you saw, and these are things I noticed, where you had different applications. Or was it Charles Schwab started to offer you could buy a portion of a stock. Now you don't even need to buy the whole share. You don't have enough to buy a share of Tesla, buy half. That's like they got that from Bitcoin. But that has never happened before, as well as free trades. Everybody trades for free trades. So who is that meant to attract, right? That all started, look at where it started at the end of last year. So that's bringing in the people to mark the price up, and then they dumped it on you. When did people know, really, the people that were really in the know about coronavirus? At the end of last year was when people knew. Only a select few. And at that same time, you have all these different apparatuses and programs to attract the regular working person to put their money into these stocks. You have Trump supporters saying, hey, Trump, the market's going up and up and up. I'm gonna buy a stock for the first time in my life. Yeah, Trump, these are the people who were buying the top, and they made some money. And this is not. And then, boom, the big guy sold and dumped on everybody. Then the Fed bought the money back up, and he bought the stocks back up. And that's kind of like what the market does. And when you see a candle like that on BitMEX yesterday, it's not much different either. The same thing.
Chats, do you have anything else to add as a conclusion?
I think yes. Clearly, the consumer class is not the stock market, and maybe I'm just kind of commenting writ large in the economy as a whole, and the fact that I think we have some lagging effects, kind of from the drastic downturn, that are yet to be seen, plus some political instability that it's gonna be nasty. It's gonna get really nasty, I think. So I just don't know what's going to happen.
I'm with you on that. I don't know what's going to happen either. Just so we're clear, like I said, it's actually coming up on a spot. So like the S&P, like 313, 315, like this area is kind of an area where you really want to pay attention. But looking at the chart, like this is not a great spot. Individual stocks look good. So like the airlines, I played the airlines. Want to know why? Warren Buffett said he sold his airlines. I started speaking to people, what do you think about airlines? They said, oh, that's crazy. Like nobody's going to fly. But then I look, Boeing in 2 weeks from that date, this was early May, is saying that they're going to start reproducing 747s. There's no way that Trump was going to let Boeing go under. So obviously I was anticipating, and then the rest of the market was performing very well. So the other assets, but this particular basket of assets were a laggard. So that's why I decided to make a play on something like Southwest. So you can look at individual sectors. There are projects, stocks that are post-corona type stocks, like something like Remark, which obviously had a crazy day yesterday with 40% gains. But that's something that we have been all over. There's still crazy volatility. There's still plays to be made, and you just like kind of look at each chart, and at the same time keep the big picture in your mind and use stop losses. That's it.
All right, guys, that was a cool discussion. So let's wrap things up. Thank you, Jake, aka Korean Jew Trading, and Big Chats. Thank you for being with us today.
Yeah. That was awesome, guys. I really thank you for having me on, Cheds. I wish we had talked sooner. I mean, I got a lot to learn from you, and I had a good time talking with you, Giovanni. Thank you so much.
Thank you for having me, and Jake. I've been admirer of yours from afar, and I'm sure we'll be soon, buddy.
Also, I want to remind our audience that we have this competition going. So just guess the Bitcoin price in 1 week from now and write it down in the comments below. The one that gets closest to the actual price in 1 week from now is going to win $100 worth to spend in our merch store. Also, if you enjoyed the conversation, just smash the like button and subscribe to our channel. And last but tomorrow, don't forget, because there's going to be a premiere of our documentary about the making of Block Show, how to create an event, making of Block Show. It's a new documentary about how blockchain events are created and how actually have been impacted by COVID-19. So don't forget to tune in. And I'm Giovanni, your host. Thank you for being with us. See you next time.
Take care.